Welcome to Investors Insights. Our topic today is 2019, a wall of worry with a big question mark. The reason that Ashley, Bobby, and I chose that as our topic is that as we close the year on 2018, knowing we move right into 2019, is the big debate will be whether or not we're going to have a continuation of the bull market or we're going into a bear market. You need to know that the saying is a bull market climbs a wall of worry. And that is one of the discussions that we're going to have. So many times, the titles, the headlines within the media will capture your attention. It may be factual, but it will capture your attention. Understand, though, you need to focus on how it applies to you. And based on that, as we look at economic conditions, Bobby, you brought up in our meeting today, things don't look as bad as the volatility over the past couple of months have indicated.
Yeah, I mean, last week on Monday, you had one of the worst market performances for a Christmas Eve. And then on Wednesday, the Dow had its best day ever. So it's been on a roller coaster ride, no doubt about it.
Right.
But, you know, going into 2019, the bulls have a lot of positive things to look at. Just this past weekend, a lot of progress was made over the China trade talks. So the market's liking that. And then obviously we'll hopefully get a clearer picture of what the Federal Reserve will do in the new year. I know Friday we talked about it. 3 of the Fed governors are meeting, so that's very important. And then also corporate earnings are expected to continue to grow at 8 to 10%. That's good. That's great growth.
Yeah.
Solid economic data. We still have record unemployment. And then we got a report last week that in the most consumer spending in 6 years happened in this holiday season. We say it all the time. We said it last week's vlog. 70% of our economy is a consumer. And by that number, that's strong. So there's a lot of confidence out there, even though the market it has a big swing.
The retailers were definitely saying happy holidays.
Yes,
There's no doubt about that.
Absolutely.
And Ashley, you brought up about the Fed governor's meeting that's coming up in Atlanta, I think. Is that correct? Talk about that.
Yeah, we're watching that Friday's meeting of the American Economic Association in Atlanta. And the reason for that, you're going to have Jerome Powell, current Fed chair there, plus Bernanke, plus Janet Yellen. So you're going to have the current Fed chair there, plus the former two. So it's going to be more anecdotal discussion on the economy, but we expect a lot of good information to come out of that. And that's particularly important on data right now because one thing you have with the government shutdown, you don't get as much data on the economy coming out of these agencies.
Sure.
The Labor Department you do, but Commerce Department you don't.
Yeah.
So we're looking at that a lot, what they're talking about on Friday.
Yeah, and also let me tell you this. On Thursday, you're going to see a vlog from Ashley talking about politicizing the Fed, which is going to be a topic. And number 2, from the standpoint, the impact of government shutdown. Both very important topics. That's why you want to follow these vlogs as we provide you information. And also understand, our clients last week received a letter from me talking about that any time that I see the market come down like this with this volatility, that we as a portfolio strategy team starts to look at it and go, there's distortions here. We had panic selling. We had tax loss selling. We had hedge funds closing. We had computerized trading taking place. Multiple things that were putting pressure on this market. And excuse me, but anytime I start seeing stocks, equities with a 5% dividend yield, I start to get interested. Anytime when I hear a corporate announcement that they're going to build a new plant, that they're buying back their own stock, that they're going to be hiring more employees, I'm going to take note to see what's going on at that company and also how it relates to the economy, to the markets, and your portfolio. And that's why we do these vlogs, to get through all the noise, to give you things you can focus on and understand how it impacts you. So as we see that the S&P 500 getting around 2,400, you need to look at that number and know that from a technical analysis standpoint, there is support for the S&P 500 around 2,400. Guess what? Even the computers know that. They'll kick in on their buying. If we go below that, the volatility is probably going to increase, but you just need to know that we're focusing on earnings and the positions that you're in. Everyone agree with me on that?
Absolutely.
So, and then Ashley, you brought up a great point about IPO. in terms of IPOs, initial public offerings, talk about what we think we may see.
Absolutely. Greg's right, it's at record level. We said this on the vlog last week. The people that are running these companies that are going to market where they've been private to make it public,
Right.
they're smart people running these places. So last year in 2018 and into 2019, we're having some of the best years in IPO we've ever had. And if you underneath were worried about the economy that much, you would put it off the shelf. You wouldn't do it right now. So in the first half of 2019, we're probably going to have a record level of that, which means people running corporate America are confident, like the consumer is still confident.
Yes, very much so. So on that note, we're going to close the books on 2018, knowing that we're going right into 2019 and hope it's the best year ever for you. And also know that we're going to be watching this first quarter very closely because we think we've got a lot of dynamic things that are taking place, and we're going to keep you informed as we navigate through the noise and focus on the numbers and the facts, which ultimately, sooner or later, give us the results in the portfolios, this economy, and this market. Have a great, happy New Year's Eve, and we look forward to celebrating 2019 with you.